Hello, everyone. Thank you for joining us. My name is Ernie Barragan Sr. Today, I'm going to share some critical insights into how to choose a mortgage professional. This will have a huge impact on the success of your efforts to secure the right loan at the right terms and in a less stressful way. I've been a mortgage professional since 1980. That's 43 years. And I've worked as an area manager for Bank of America, as a business development officer for Citibank, and as a broker of record for other companies. Additionally, I've owned my own firm for many years. So you could say I'm an old dog, and I've seen pretty much everything. I've seen the good, the bad, and the ugly of the mortgage industry. So here goes. When selecting a mortgage professional, what exactly are you looking for? Well, let me help you. Here's a few things that he or she should not be. A mortgage professional you select should not be a product pusher, just trying to push a given set of programs that they may have. He should not be a bad listener and a poor returner of phone calls. Interestingly, Fannie Mae and Freddie Mac, in doing surveys of complaints that they receive every year, have found that the number one complaint from customers is, can you believe it, failure to return phone calls by the loan officer. That's horrible. Your potential mortgage professional that you're going to work with should not be an overpromiser. Shouldn't promise the world and then not be able to deliver. And he should not have just a simple limited suite of products, but rather a multitude of products. Let's illustrate it this way. Say you're at the hospital with your family and you're talking to your mother. She's in bed. There she is, not feeling so good. The family's around her bed. Everybody's whispering, what's wrong with mom? What's wrong with mom? And then all of a sudden, in comes the doctor. Instantly, there's quiet. Why is that? Because the doctor has massive knowledge and capabilities. They have all these diplomas. They've got all of these colleagues. They've got all of this equipment at the hospital. And this individual is showing a genuine interest in your mother. Well, that's the same thing that should apply to a mortgage professional that you select and that you're going to use. He or she should be a real trusted advisor, much like that doctor. First of all, he or she should show a genuine personal interest in you. They would be a great listener, someone who really wants to understand your needs and concerns, your situation. He should be interested in you, not just temporarily, but for the long haul, not just one deal, but for your family over many years. One other point, this individual should answer your questions, your phone calls, your texts promptly. No hesitation. Additionally, this mortgage professional you're going to select should have massive knowledge and capabilities, like the doctor we used in the illustration. They would understand credit scores, and how to improve them, understand what judgments are and charge-offs that show on the credit report as well, public records, and so forth. On income, you should understand all the income issues, job stability, what the self-employed borrower's concerns may be, why some people don't show all their income on their tax returns, how bank statements can be used in lieu of 1040s, and so forth. On title matters, this mortgage professional that you're going to use as trusted advisor should understand probate matters. He should understand the ins and outs and concerns and pressures of divorce cases. He should understand how to deal with old, unreconveyed liens that may still be on title, on judgments maybe for child support or spousal support payments that haven't been made. And he should understand vesting matters, the various aspects of how a property may be taken in ownership. On other matters, on these loan documents, for instance, he should understand what a truth in lending loan estimate is. When is a rescission required, a 3-day waiting period? What are real comparables for value versus what someone may tell you is a comparable or what you may hope is a comparable versus what is a real comparable? This individual should also have many multiple program options. Besides full doc loans and bank statement loans, they should have available to themselves home equity lines of credit, or HELOCs as we call them, VA loans, FHA loans, interest-only loans, commercial real estate loans, and so forth. And they should explain potential problems. I call it loan turbulence, much like an airplane. When it's in trouble, maybe it hits some turbulence, and the pilot says, don't worry, it's going to get a little rough, but we're going to land safely. Well, your loan officer should be able to tell you, hey, there might be a problem here, but we can handle it. We're going to solve that problem. And so being able to do so, they would understand underwriting guidelines, debt ratios, closing timeframes, and other issues like this. So now let's take this matter of listening. Your mortgage professional that you're going to select should be someone that listens to understand. They should not have some preconceived idea as to what they have in mind. They're going to try to fit you into their mold. No, they should listen to you by asking the right questions, understanding your situation. Basically, he's going to ask, what are you looking for? What do you want me to do? How do you want me, the loan officer, to communicate with you? Do you like texts? Do you like emails, phone calls? And how often do you want to communicate? Over the years, I've had some borrowers that want me to call them or talk to them at least 2-3 times a day. Others would say, no, you handle it. Call me once or twice a week as you need to. I trust you. It varies. The loan officer should be willing to accommodate you. We could illustrate also their skill and knowledge to the issue of someone looking at a train. You see a train coming down the train track. Yep, that train is going to hit you. That's knowledge. You understand that if you don't get off the train track, it's going to run right over you. That's understanding. And now when you jump off the train track, that's wisdom. Well, that's what your loan officer should do for you. He should have knowledge of his programs, his underwriting guidelines, and your circumstance. Then he should understand how to put those together and mesh them. And finally, he should have the wisdom, the skill, and the ability to come up with wise, practical, realistic solutions to your concerns. Your mortgage professional is, to put it another way, trying to find your pain. Your pain should be their concerns. You're a mortgage pro, so you must keep this in mind. Basically, he should ask you something like this. Where does it hurt? You might say, you know what? My apartment is too small. I need more space. Well, that's pain if that's your situation. Or maybe you're getting a divorce. You need to pay off your ex-husband or your ex-wife. That's your pain. You should understand that and delve into those issues. Or maybe you see that you've got too many monthly bills and monthly payments are too high. Well, that's a pain as well. That's your pain. You should come up with a solution for this and be able to say basically like a doctor would say, I see now where the pain is. After that, you could say something like this. Could I take about 30 minutes to an hour to analyze your situation and get back to you with some real solutions? What if your doctor took 5 minutes after talking to you on the phone and you said to him, Doc, I've got this pain on my side. It really hurts. And then without taking any tests, no x-rays, no blood samples, no close examination, he proclaimed to you right then and there on the phone, he said to you, you know what, Mr. Patient, you need major surgery and you need it right now. That's malpractice, right? That's the same thing for a mortgage professional who immediately offers a solution without any analysis of the problem, your circumstances, the programs you might consider, pitfalls that may transpire during the process. Additionally, this loan professional, if they really are professional, is going to need to see some x-rays, as it were. He's going to need to see your income, your credit, your job history. These are his x-rays, his tests. Without doing that, he can't really prescribe a solution to your problem. Your trusted advisor, your mortgage professional, should then analyze and come up with at least 2 solutions to your needs, to your pain. He should be able to say, I think I can make your pain go away. You said it hurts here. So what if we could do this? Here's my first solution. You think that would work? Would that make the pain go away? Or here's another plan. Let me make this suggestion. Do you think that would help? What do you think? Which one of these two do you think will address your needs the best? Bottom line, when you select your mortgage professional, you should feel that it's going to be a win-win situation for everyone. It should be a win-win for you, the borrower. You should be satisfied, more than happy, and the loan officer as well should feel he did a good job for you and for his company. Additionally, there should be a collaborative process. When you talk to the loan officer, you should not feel you're going up on high, appealing to this loan officer to help you. You're not begging for anything. On the other hand, the loan officer should make you feel that he's sitting on the same side of the desk as you are, and he's working hand in hand with you to solve your problems. If he can do all of this, this then is a mortgage professional that you can trust. In the installments to come of this video series, we're going to be covering some other interesting topics. How to improve your credit score. Well, here's one. How to deal with real estate issues in a divorce matter. That's a pretty hot topic right now, and we're going to consider that in upcoming videos. Or what does an effective approval letter, pre-approval letter look like, and why do you need one if you're purchasing a house in the near future? What is law of agency and dual agency in real estate transactions? Understanding that could save you literally thousands of dollars in a purchase transaction. Here's some other topics that we'll consider. How do you calculate debt ratios? What are the basics of commercial lending? What are the basics of property valuation and appraisal matters? What are the basics of property title matters? And many other topics. Thank you for listening. This is Ernie Barragan from Fairway Equity Services, and we're out.